Hi, everybody, and welcome to the weekly market wrap for February 9th, 2018. It seems like we finally got the correction that everybody's been saying that we were going to get for the last year or so. So here's what happens with this correction. We're in a position where we basically gave back all of the gains from 2018. Okay, so if you take a look here, if we go to January, this is where we started January and you're looking at a weekly chart. Let me just pull it to the daily, see if we could kind of get this in there. So from a daily chart, each one of these candles represents one day of trading on the S&P 500 ETF. So you'll see here that the horizontal line is the break-even line for 2018. So what do we do? We had a great move higher, probably I think it was about 7% or so, and then we pulled back, and now we're down 11.8% from the highs for 2018. So it is a pretty good pullback. It is a correction. It's not abnormal for a correction to go down by 10, 11, 12%. And I know everybody on television, everybody wants to tell you don't panic, be careful, just stick with it, stay the course, all those different things. But the reality is, panicking may not be such a bad thing. It just depends on where you panic, right? If we would have panicked last week and sold every stock on our focus list, it would have been better than if we now had to take off five losers this week, which stinks. But this is what happens when the market starts to correct. So what we want to do is we want to put ourselves in a position where we have our stop losses in there because we know that the market is in a situation where it's not just going straight up and having zero volatility. Now we're getting volatility, and the price action is actually against us a little bit. So what that means is that we just have to stay do exactly what we're doing as far as the strategy goes, but also respect the stop losses. I mean, don't not sell them because you don't like to take a loss. That's too bad. That's what we do here is when we see something that goes against us and it hits our risk parameter, we get the heck out. Because even if we're wrong by getting out, because the market's going to pop up next week and go higher, and every one of the companies that we took off our focus list will continue to go back up, that is even more dangerous than going out there and taking a small loss. And the reason being is because if you get your mental mindset into the uh, the mindset, excuse me, the mindset of just going out there and not selling when it hits your risk parameter, you will lose all your money. So it's one of those things where you'll get caught up in this downdraft of, oh, we'll give it another week. Oh, we'll give it another day. And before you know it, you're down 70, 80%. Ask me how I know that, right? I mean, it's happened to me before. So my point is, in this stage of my career, I know damn well that we have to respect the stop losses. Because a lot of times, what I've seen, 2008, 2011, and even earlier than that, I've seen these corrections that everybody thinks, oh, it's just a 10% correction, no big deal. I've seen them turn into way worse than that. So nobody knows. So once we're honest with ourselves and we realize that, hey, I don't know, you don't know, and nobody knows where the market's going to go, then we could say, okay, well, we can't control the market, but what we can control is how we react to the market. So what we do with the newsletter is we put a high probability setup that comes along with what insiders are doing with their own money because they know their companies better than anyone. And then we put if then statements attached to our setup. If the stock does this, then we will do that. If the stock goes down 10%, 15%, then we will sell the stock. If the stock goes up 30% or 40% or whatever the percentage is for that company, then we will sell the stock. So it's not predicting, it's putting a system in place that is predetermined your action by taking the emotion out of it. And on top of the whole thing, the system is founded on the fact that insiders know more than anybody. So it does work over time. I told you when we were winning a whole bunch, we're going to have bad weeks. This is a bad week. So we'll deal with it. It stinks. We'll get over it. But I just don't want to be the guy who comes on here and says, "Oh, don't worry, everything's going to be okay." Well, I don't know if everything's going to be okay because I don't know where the market's going to go. This could be the start of a 40% downside. I have no idea. Now, I'm not trying to scare you or I'm not trying to make you feel more comfortable. I'm just telling you that I don't know. But what makes me feel comfortable is that if the market does go lower, we are going to have less exposure because now we have five less companies on the focus list and we added one. If the market continues to go higher, we'll get less companies stopped out. We'll continue to be longer than we would otherwise. So I hope you guys understand kind of what I'm trying to get across. It's just basically don't panic. Don't panic doesn't mean don't sell. Don't panic means have a plan beforehand so that you're not making an emotional decision. So that's what I think gets lost in the don't panic statements by all these so-called market gurus. Okay, so as far as everything goes here, I hope you guys didn't get hurt terribly, but a lot of people did. The market came down about 5% in a week. It had one of its worst weeks since 2011, or at one point it was since 2008. But I know we had this today. We had this pretty big rally. If you look at, I'll throw up an hourly chart here for a second. So this rally here, I know it looks small on this little chart, but from the bottoms of 252 to 262, that 10-point rally is essentially a 4% increase in value of the stock market within 2 hours. So that was a huge rally. For everybody that's long, I hope it sticks and I hope we can make a ton of money going forward. But if it doesn't, we do have a plan, and the plan is lies within our stop losses that we'll get out if things continue to get worse. So um, keep in touch with everything. I'm trying to keep the stop losses smaller for the newer companies that we put on there so that if we do have to take a loss, it's not a killer one. So we'll definitely just continue to do what we do. But good news for us is that if this market does take a 40% decline, we at least will have way less companies on our focus list than most people will have in their portfolio. So good luck with it. I'll continue to look for insiders that are taking advantage of this. We had Jamie Dimon buy about, I don't know the number. I think it's $500 million worth of JP Morgan stock um, a while back when the market had a huge dip, and that stock literally doubled since he did that. So it's interesting, and if I see any type of those big purchases by insiders, obviously you'll see it here. So good luck. Have a great weekend. This is normal for markets. What we had going before in 2017 was not normal, where the market goes up every day and doesn't really go down. This is more normalized, so expect a little more volatility, and I think you guys will do great over time. All right, thanks so much.